In this, the 88th episode of the Banking with Life podcast, Ryan and I pay tribute to our Nelson Nash. Thank you for listening. Hope you enjoy it. Welcome to the Banking with Life podcast. I'm your host, James Neathery.
And I'm your co-host, Ryan Griggs.
And we're here on a beautiful weekday. Typically, we're on a Saturday morning, 20 miles south of Fort Worth, Texas, at the world headquarters of Banking with Life, downtown Alvarado.
And today is March 25th.
March 25, and that, the date in this episode is exactly why we're here out of our regular schedule.
Yeah, so this will post on Saturday the 27th, and the 27th here in 2021 will be the second anniversary of Nelson Nash's passing.
Mm-hmm. So, and it will be episode 88 out of sequence.
Yeah.
On purpose, because he was 88 years of age when he graduated. Mm-hmm. So that means that we're going to talk about Mr. Nelson Nash this entire time. And we normally talk about Nelson just about every time we talk, don't we? Mm-hmm. Typically. And, look, it's, I try to really avoid thinking about people that you've lost in your life, But at the same time, you think about them every day. So it's kind of a weird paradox.
Yeah.
But it's all good. I want to be positive, because my experience with Nelson from the very first time meeting Nelson has been positive the entire time. So,
yeah, like unusually positive. I mean, on the way over here thinking about, so I knew we were going to do this episode, but, and I hate repeating myself. So it's like, what could I mention from my experience that we haven't talked about before? And one thing that came to mind was just how much of a contrast he was, like his demeanor, his approach, everything, relative to what I had gone through in the 10 years prior to meeting him. Right, so it was out of high school, various college experiences, and then during that time finding Austrian economics, and then starting down that track of moving towards a professor kind of role, and just a unpleasant experience all around.
Yeah, so in the world of economic education, and then the experience of learning from professors, and I don't want to beat anyone up, but that's the experience that you're speaking of, isn't it?
Oh yeah.
So,
it's just,
and then the contrast, meeting Nelson, right? Who was, he was a forester by education, right? He was one of the best dang economists I've ever met. He just didn't happen to work at an institution in a professor type role.
Yeah. I mean, it was really like a saving grace for me. I was in my master's program in 2016 in Northern California, desperately searching the internet for what people who did Austrian economics did outside of colleges, outside of
you had enough of your relationships or experience with professors, so you're looking to get a little further away from that, but remain in the world of economics.
Yeah. Like, what else? Please, something else. And I
sounds traumatic.
Well, yeah. Well, and I had thought about finance at different types of financial activity, different types of financial jobs, but so many of them were linked back to the stock market and banking, and it's like the statistics were not good. For someone who graduated with an economics degree, it's you went into a graduate and postgraduate and then academic track, or you went and worked for the Fed.
It's like a government job.
Pretty limited
connections, man. Golly.
Yeah, and most of the universities are state universities, so it's like one way or another you end up, like Murray Rothbard used to say, if the state was, if the state did what even it purported to do, like even if it was a minimalist state, and even furthermore, if we lived in a fully free market, the role of the economist would be extremely limited. You would just be teaching people. I mean,
there are so many professions today that would be absolutely eliminated if we were in a free market, in a limited government. Oh my gosh, I'm just hearing Nirvana in the back of my mind. Yeah. And
it kind of aligns or mirrors with what I'm saying about my academic experience in meeting Nelson. It was almost like the college thing was a distraction, and that meeting Nelson, it was like you could just put all that aside, and here's something that you can do that's economically informed, that actually serves other people, and you can have a profession, and provide for yourself and family while doing it.
Ooh, practice capitalism and practice, in fact, in action, Austrian economics.
Yeah.
What a concept. You should probably connect all your professors up with this gig.
Yeah.
The idea that you can become your own banker is a gig I'm talking about.
Well, I do have professors as clients now, which is always fun.
I'm talking about your Austrian professors.
Yeah.
I'll tell you what, I've got lots of economists as clients, and you can see on paper before you ever talk to them, and then when you talk to them, it's like, oh no, this is what I have in mind. This is what I envision an economist to be. Rental properties, side businesses, profitable. I'm just saying. But if you shared the infinite banking concept, and I don't want to be harsh, I'm full of love and grace. Okay. But if the Austrians understood the infinite banking concept, they'd be out of business. They wouldn't have anything to talk about. If we practice in a free market, if we had a free market, if we had limited government, the CPAs who always love to debate the infinite banking concept or life insurance would be out of a job. The stock promoters, not all of them, but a dang lot of them would be out of a job. Yeah, I keep hearing Nirvana playing in the back of my mind.
But that's really what Nelson represented to me, was an alternative to all of that. And it didn't have to wait for anything to change politically. It's just something that I could do to utilize what I had learned at that point. And in fact, after meeting him, then the education really started. I had sort of attained a degree of mastery, of competence in praxeology and the theoretical side of Austrian economics. But after meeting Nelson, it wasn't, it was 2017, I think, when I first stumbled upon that alternative notion of capital within the Austrian world.
Yeah.
And Karl Menger's second 1888 discussion of capital, and then linking that up, and that's one thing I thought about too on the way down here was the 2019 think tank. So this happened in February. He passed away in March, so he was present for that last one, and I got to speak there and kind of laid out that understanding of capital for the first time, and how it linked up so hand in glove with what he wrote about in Becoming Your Own Banker.
That must have been a revelation for you.
Oh, it was a big deal. Yeah. It was exciting. And then, people have commented when they watch the talk, about how passionate I get. And I remember thinking back to it, and it's like, I was pretty worked up. But because I was so excited, and to have him sitting in the front row and to remark at different points, he's like, oh yeah. Throughout. That was really neat. I think I even chuckle at some part in there because he had spoken up so much during the talk that was cool.
How when you're searching for what economists did, outside of the educational track, what kind of a time period was that you went through? Like, oh, okay, discovering the infinite banking concept, and
it was pretty quick. So it was like early 2016, late January, early February maybe, because through a professor I'd become aware of, I discovered Nelson and got his book, read the book real quick, was very excited, looked online to see if he was available, like if he had any kind of public presence, and he was still doing his seminars then. And it was in May of 2016 that I met him. And by that time, I had already laid out the plan to go to Texas Tech and, continue down the PhD route. So met him in 2016, my policy date for that contract's in May. So it was.
Do you want to sell that?
Less than a
I'm
month.
Just asking.
No, I'm good. Yeah. It was less than a month after the seminar that I had the contract in hand. So application, underwriting, yeah.
That was a learning lesson in and of itself, wasn't it? I love this concept.
Yeah.
Oh my gosh, it's a whole new track that I can explore and maybe dive off into.
Right.
But I want to implement this idea and this concept in my life today. So
let me dial up a conventional agent and
educate.
teach him myself.
Yeah.
That was silly. But it's okay. I mean, it's not the worst.
Yeah, it's not the end of
it ended
the
up with the worst thing in the world. But so I met him then, got my first contract. That's 2016. I still went through the first year of the PhD program at Tech, and it wasn't then until about 15 months after meeting him that I decided to become an agent.
What made you decide to do that? The experience that you had with the conventional agent with the Big Four company that didn't come here from Sikkim about infinite banking and despise loans and.
There's a combination of things. I mean, there were
loans.
Positive and negative things, push and pull factors. So on the negative side or the push side, there was the experience in academia and just seeing what it meant to become what that world thought of as elite. It's not pleasant. I mean, not that becoming successful in any domain it should be pleasant. I'm not saying that, but
it could be. There's nothing wrong with a little pleasantry along the way.
Yeah.
It helps.
But there wasn't much of that at all. so that was unappealing, and I learned some things about the nature of economics education in the U.S. that you're not gonna. Unless you sort of carve out a niche for yourself, which in something like academia is extremely difficult, just for logistic, bureaucratic reasons.
No, and pure acceptance across the industry. I'm sure that's broad.
Right.
Yeah.
So you're not going to find to go out and just teach class like Austrian economics, like to teach from human action. I mean, it's just there's maybe a handful of people in the country today who do that. And they're extremely senior. They've been around 10, 20, 30 years. And so they've got a degree of security they can do that.
Extremely senior? 10, 20, 30 years?
To be a professor for that long?
Is it?
Oh, yeah.
Okay.
For sure. And you got to get to that point in order to do what you want. Right? It's towing the line up until then.
Wow, you're like the water boy until then, huh?
Oh, yeah. I mean, it's a 7-year... You're fortunate if out of a PhD program you get a job that's tenure track at a university that you stay at, and then you go through typically a 7-year period of associate professorship, then assistant professorship, then full professor with tenure. The shortest time is usually 7 years.
No wonder there's all that pin-up angst, and then they become tenured and then go nuts because they're tenured.
Yeah.
I don't know.
That's
I was
a long
over academia
time, right?
early on in my little education, formal education, early on. But
there was just such a heavy appearance that was the only route.
Yeah.
If you wanted to do something that involved, intellectual things.
All right. So that was not as positive as that experience.
Yeah. So that was okay. So then meeting Nelson and being like, wow, I could, he would stand up in front of a room of 10, 20, 30 people and just talk and do a seminar. That I really liked because I enjoy getting up and talking in front of people. And I'm like, well, gosh, I could do that. It's the exact opposite of a classroom or professorial setting, but same fundamental, same thing. You're up there talking, presenting, and
teaching, educating.
Yeah.
Legitimately.
So that was appealing.
With an interested audience.
Right. So the actual physical activity was appealing. The content was on point, right? Like it aligned philosophically and aligned with what I had understood economically. So that was enticing. And then, through college, I'd worked as a waiter at a lot of different restaurants. And
God bless you. I could not be a server.
No, you couldn't.
I could. It'd be a good one, though.
But it was... it's mostly some of the states I worked in, it's called sub minimum wage. So it's like $2 an hour or something. And even in the states where it was a minimum wage, the actual wage pay was a relatively small proportion of your actual take home. And
all that cash.
Which is, people are like, oh, waiters, but for somebody in school, if you want to develop a social competency, and make good money.
Yep.
Depending on where you work, and make good money, it's there. So I enjoyed the sales kind of thing, where what I did,
upselling the food.
I don't
upselling the alcohol.
I feel the same about the sales tactics in restaurants that I do about the sales tactics in finance
or anywhere else,
like funnels and programs and all this. It's like, no, if I can talk to you, figure out what you want and what you like, and we do that, and you have an enjoyable time along the way, then I don't need to upsell you or aim for a percentage.
It just sounds like a natural occurrence between willing people that want to be in association. Mm-hmm. What a concept!
And I was selective too, like we are now with company selection and like who we'll work with and the type of product and client selection. Who will allow to be a client. The same principles were in play in the restaurant scene. Right? I wouldn't work somewhere that I didn't like to eat. If it wasn't good food, but people do that and they're like, oh, I'll just go wherever's hiring. It's okay, well, enjoy working up the energy to make a good recommendation tableside,
That would be very fatiguing.
Yeah.
Very.
So I was super selective about where I would work. And then that had something to do not just with the food there, but the clientele that would show up at the restaurant, right? You don't want to work at a, dive or a bum place.
Well, if you don't like the food, in this example, the people that do like the food, there's there's a further separation of likeness. You know what I mean? So
absolutely.
If you go somewhere that you do enjoy and the people that go there, they enjoy it too, you're more likely to be like-minded.
Oh my gosh, like-minded. Doing business with like-minded people.
Right.
What a concept.
Free contract. They can go anywhere they want to go to eat, and you can go anywhere you want to go to be a server.
Yeah. And it's the same sort of thing, like from the public's perspective, there's all sorts of people who like to abuse the waitstaff.
Right now. Right? Yes.
And there's all sorts of people who like to
and that's why I could not be a server.
Life insurance agents.
Oh my gosh.
The sales person. But point being, I enjoyed doing well in that environment, and walking home and knowing that I worked my ass off and it was, got paid and
people were pleased.
They'd come back.
Yeah.
Yeah. So I enjoyed that, and I knew that in financial sales that was pretty much the dominant model, is that it's all basically activity.
So did you think early on that could happen in the financial world, that structure and that atmosphere? And
theoretically,
you were hoping,
right?
For sure.
Yeah, like I knew that life insurance agents get paid commission that is a percentage of the premium in some way, shape, or form, and that theoretically, with enough people or high enough premium, that would mean a good living. And it's like there's got to be a way there.
You're right.
Yeah,
I thought that too when I first started.
Right. Well, and then I get into this. So the first thing after the first year in the PhD program, I went to a captive company.
Where you bought your policy,
same company that I had bought the first policy from.
Did I say Big Four? Didn't know anything about the infinite banking concept.
Right.
Doesn't really like loans.
Yeah. But I shortened
mechanics of their policies.
It's funny to look back because I was continually shortening how long I would allow myself to endure the nonsense.
That's pretty good. I mean, at the front end of a career, I mean, good job, young man.
I got better at it. Like 10 years from out of high school, 18. 6 years of like poking around at various colleges, and then narrowed that to academic professorial kind of thing, and only that only took 1 year to figure out that wasn't the way. So we went from 6 years to 1 year, and then at the captive company, it's only 2 weeks. And so it's like, I'm learning faster.
Right.
And then we met in October
of
2017.
So you're hanging around a long time, man.
Yeah.
So you'd already heard Nelson live and in person. Then you went and bought your first policy, right? Went through that educational learning process. But then you decided that you wanted to do this. And so you went back to that Big Four company, spent 2 weeks there, and then refresh my memory on how we came to meet.
Nelson.
So you decided you wanted a career in the financial world, and that just wasn't the right company to go with. So you wanted to become an N&I practitioner.
Right. Went through that program, and part of that program at the time was a mentorship arrangement.
Requirement.
And, right.
Which was the N&I the Nelson Nash Institute trying to improve their processes. Right. And, absolutely a step in the right direction. So at that time they required an interview, which was previously not required. Right? So you have to go through their program of Austrian economics and I think some fundamental life insurance training, but not a lot of that. And then they had that, and hence the mentorship program. They wanted to pair new practitioners with experienced infinite banking concept agents and have that mentorship arrangement for some time period, and then that's part of the process of becoming a recognized practitioner. Right at that time it was so. And okay, so you did all that, and then
and the next time I saw Nelson was you hosted him, actually in this room where we are. Right.
That's why we moved over here. We were next door, and then we moved over here to a larger physical footprint. And they have this is the old county courthouse or sub-courthouse of Johnson County. And so we're in the actual old courtroom, so there was room to do live events. Yep. That's why we're here. And Nelson was here a couple of times. I mean, he was on one of the early podcasts.
I think it was the first one, yeah.
I think. He did a Q&A here, Nelson Live, and so, yeah, we're here. And I do remember that you were in Lubbock at the time, and I don't remember.
I think it was the first time I met you face to face. Actually,
we had talked over the phone. I don't remember. I mean, listen, I don't have a memory like an elephant, but I've got a great memory. But I only have so much room in this big egghead. But and I don't want to jump over the fact that Nelson, right, is the one who thought it best that I mentor you, that you mentor with me. So I don't know how many practitioners there were at that time, and I don't know how many are in Fort Worth or in Texas, but you were in Lubbock, right?
Yeah.
And so I'm very grateful for that, and I think that's just more evidence of how smart Nelson was, my opinion. So we spoke over the phone, right? And then he was coming, and I think I kind of told you needed to be here.
Yeah.
And you did. You drove 6 hours to be here. Unless you were speeding, then you could make it 3.5. And that was when?
It had to be late 2017.
It was like October, November. Yeah. Seems like we did a lot of seminars around October for some reason. I don't know. It just worked out.
Before the holiday. It would be before Thanksgiving and stuff.
Oh, okay, November.
Yeah.
And so, I mean, his schedule and our schedule. But it just seems like, I mean, we have hosted Nelson a lot of times over the years, and it just seemed like they were, you know, you try to do one, get people to come, and, you know, and then it developed into 3 times a year. So you're giving your clients an opportunity to hear him again and again. And it just seems like October and November, we did a lot of seminars. That's all I'm saying there. Yeah. Okay. So you came and you listened and you thought, oh my gosh, this is it.
Yeah. I mean, there was a magic to when he would talk. Every time it was like a refreshing, you know, goosebumps again kind of thing. It's like, oh my gosh, this is really, you know,
possible. That you mentioned that. I was speaking with a client yesterday on the way home. I mean, I wake up and I stick an earbud in my ear, and I talk all day, and I drive home and have conversations on the way home. I was speaking with a client, and he said, "Wow, James," he said, "the client-only access, he's a client, right? And so I really enjoy that. And he's a farmer, so it's on tractor time, you know, and he was commenting, and he had purchased Nelson's 6.5 hour presentation on DVD that you can get, that's available from NNI, and I encourage everyone to purchase that. And if maybe we'll put a link down here, you can get a discount if you purchase that through our office, and take advantage of it if you wish, and if you don't wish, it's okay. I don't receive your information to market to you. You know, just you get a discount if you purchase it. But he was saying that it was how powerful that was. You know, reading the book and then listening to Nelson and then listening to the client-only content that we have. And I told him, and it's true. You know, I think he's been kicking this around for a couple of years, been a client for, you know, less than that. And I'm like, listen, and we always talk about an element of unknowing. You know, there's a certain element of trust and faith, right? Because, you know, what they read and what they hear, they don't know the prospective policy owner, the prospective infinite banking person, the person who wants to become their own banker. And they're at the front end of that. They don't really know, right? They're reading this, and the book was printed in 2000. It was revised in 2010. Here we are in 2021. And I recognize there's an element of faith and unknowing, you know, so they do their vetting, however that is done. And the really smart ones listen to this episode and all the content on this channel, because if you can't vet someone's character watching 100 hours in video, you probably, you know, you have an opportunity to improve, is my, you know, commentary. My whole point is this. Let me get to my point. We were talking about that element of faith. You know, he's going to like open additional policies, which he should. He started too small like the rest of us. And it's okay, but he sees that what he expected is in fact actually happened and happening, and maybe a little better than he really, right? And so what's wrong with that? Nothing. And I was just sharing with him, his name's Jake. I'm like, Jake, you know, if I didn't have the opportunity personally to hear Nelson 1 to 3 times a year over a 15-year time period, I probably wouldn't, you know, do what I'm doing. So, and I have said from the beginning, when you start too small, or in my case, when we started buying life insurance policies, and it was a lack of faith that we started so small, you know, but I didn't realize that at the time. I just said, trust the life insurance companies. You know, go figure. Yeah. After being in the life insurance business 14 years, right? So I've said it many times, you know, but not everyone listens to every episode or everything that I've said previously. I penciled the numbers. I penciled the life insurance company. I penciled the dividend. I penciled the loan interest rate. Yeah. I penciled everything for the first several years, right? And then finally you quit penciling it. You quit proving the math and the numbers. And hence the reason, you know, I don't do these exotic presentations and try to prove a 37% rate of return or printing money out of thin air. like the bankers and all of the shenanigans that go on. So I was just expressing the fact that, and acknowledging the fact there is an element of unknown. No kidding, the future's unknown. I don't care what you do. Mm-hmm. The future's unknown. And that most of my clients have more faith than I do because they didn't necessarily, especially newer clients, excuse me, they didn't have the opportunity to hear Nelson live or more than once, and I did. And they're doing,
and they're hopping right on it.
Yeah. So I just think that's very powerful, and I'm humbled, So.
Well, we come back every now and then to the idea of like the impact he's had, as far as you could think of it on different levels. The amount of premium people pay, like not just his clients, but the clients of the agents.
No question.
The clients of the agents, and like how far down that trickle.
The life insurance industry couldn't even calculate that.
Yeah.
The amount of life insurance that Nelson Nash directly himself put in force, because he was an agent in 1964. Mm-hmm. He quit writing policies outside of his family members and his clients in 2000 when he printed the book. Right? Whoa, what a concept.
Wow, 36 years.
Huh?
36 years.
Yeah. And he won every award that the companies that he wrote had, right? Lifetime.
Yeah.
I mean, lifetime achievements. I mean, when he was an agent, he wrote a tremendous amount of life insurance. So, and then, he 1980, he started teaching this, Becoming Your Own Banker, right? And the book was a culmination of all of the teaching that he had done and the experience that he had as a forester, as a Christian, as an economist, and as an Austrian. And he would let agents come, right? So, of course, most of them wouldn't. Right? And most of them didn't hear about Nelson. The life insurance companies didn't promote him. They didn't promote the infinite banking concept. Most of them still think it's a sales gimmick.
Right.
And, a lot of agents treat it like it's a sales gimmick. And, it is what it is. So a lot of people think it's a sales gimmick. Mm-hmm. And people can think whatever they want to think. But at the end of the day, when I met him, he was doing 40 to 45 seminars a year. Padna. And I met him when he was like 72. All right.
Yeah.
And I told him all the time, you work harder than most 40-year-olds that I know. All right,
That's a lot.
That's a lot.
That's a lot. Traveling for each one of those 2-day seminars each time.
That's a lot.
That's a lot.
And then he didn't do 40 or 50 every year. I'm just saying there were several years there that, he was working. And so you look at all the people that attended and the agents that attended and the agents that, were embraced the idea, right? And then they started practicing it, and then they started teaching it, and it's like you cannot calculate the amount of life insurance that man caused to be enforced. Okay, excuse me. Well, beyond the life insurance, right? So look at how many generations he's touched, right? He's had clients, and his clients, their great-great-grandchildren, right, are affected. Then the agents, there's 2 and 3 generations for the agents, and then their clients. It's phenomenal. It's unbelievable.
Yeah,
and it's just beyond the dollars. The free thinking that he has caused. It's incredible. Very, very powerful. I know he changed my life. That's for dang sure. I met him. I think I met him in 2004. I know I should go back and look and see when I actually met him. And after 14 years in the life insurance business, having no idea you could do with life insurance, what you could do with life insurance. And everybody knows that if you have a cash value or an account value with those janky UL policies, they have a loan provision. You know what I didn't know, and I was never taught, the cash value was not an idea of the life insurance companies. The loan value, or the loan ability, the loan provision in the contract was a life insurance company's concept, right? Because they wanted the client to be able to borrow against the cash value to pay a premium.
Pay the premium, yeah.
So, but beyond that, when I heard Nelson, the first time I heard him, he said that this is, and he said it every time. This is a exercise in imagination, reason, logic, and prophecy. And I heard prophecy. That's what stood out to me, right? And I'm like, I'm sitting in the back taking copious notes. I'm just, a life insurance agent in the back of the room, right? But of course, he, had the opportunity to meet him, and if you did, he, made you feel very special, personal, very direct contact, Southern gentleman, the epitome of. And I'm just like, why hadn't I ever heard of this? And then he talked about, his brother and worked for IDS, Investors Diversified Services, which became American Express. And they had the investment plan, right? If you had $10,000 over a million years in the market, you could become a billionaire, right? I mean, I'm emphasizing what he said. Since you don't have $10,000, we can put you on a monthly savings program. And once you get to X number of dollars in the future, then you can start an investment portfolio. And you had to sign, it typically took 7 years. And you had to initial right there in 7 years. By the time you put in money over a 7-year period, you'd have equal about what you put in, and then you could go into an investment program. Yeah. Well, earlier in my career, I was with a Fortune 500 company who today owns 2 mutual fund families. And back in the day, the mutual funds had an 8.5% front end load. Well, you'd have nobody would buy that today. You'd have a heart attack if you had to pay that today, but that's the way it was back then. And so that's just the way it was. And they had that very same program, right? If you had a bunch of money, you could start, if you don't have the minimum threshold to start this investment program or portfolio, you could get on the savings plan. And you had to initial it right about 7 years into it. I still have some of those old documents. So when he said that, I heard that, right? I mean, I had done that. I knew who IDS was. I had applied with them previously in my career. And they told me, you can't sell life insurance. You can't sell investments. You'll never make it in this industry. And they were one of many, previous to that. I remember interviewing with different life insurance companies and had to take the LIMRA. It's like a psychological test to see if you can sell. I failed it every time, And these big, robust men, and listen, I'm fat for a reason because I like food, okay? These fat guys like food, but they didn't work out either. I don't know how many of them told me, well, James, it's not going to be a good fit here. You can't write life insurance. You can't sell life insurance. You can't sell investments. This is not for you. And now, I don't know. Probably write more life insurance in a week than they did in their best year.
Yeah.
And I'm not bragging. I'm just saying, right? But they're right. I couldn't sell life insurance. I'm a complete failure as their ideal model of a life insurance salesman. Don't fit their role, and I'm okay with that.
Right.
But anyhow, so if you look at, it's kind of like the pebble in a pond, the ripple effect that people have throughout a life or lives or generations. And he's no different, and we've said it before, we talked about it, than his mentor, Leonard E. Reed, who also mentored Ron Paul and many other men and women, right? And I think there's one video, or maybe two of the same one video, of Leonard E. Reed giving a presentation. And so Nelson used to have Leonard E. Reed come to town and put on presentations, and he invited his clients, and liberty and freedom. Oh my gosh.
Yeah.
But if you look at how many lives Leonard E. Reed touched, how many lives Ron Paul has touched in the political world, they went two different, Ron Paul went into politics and Nelson went into forestry and had an experience somewhat like yours. It wasn't what he thought it to be, and then went off into economics.
Mm-hmm.
Thank God. And look at how many people he's touched.
Yeah.
I don't know how many. Anyway, a lot of people, changed a lot of lives. And we'll change a lot of lives that, we won't ever have the opportunity to see or meet or enjoy their success and their outcome.
Yeah. And I think what's happening now in sort of the development of this niche of the IBC community as far as advisors are concerned is, at least based on what I've seen, is that you had a lot of guys and a few women who were in finance in some other field. Mm-hmm. Then they met Nelson, and most of those who incorporated IBC did so partially, right? They kept the rest of their business going, the assets under management, mm-hmm. Property and casualty insurance, mm-hmm. whatever, the pension stuff, tax qualified plan stuff, kept some of that, added some IBC stuff.
Mm-hmm. There's some of that, no question.
And I think now, and I'm not saying I'm the first, but of this generation,
You Lone Ranger, man?
Just doing IBC, mm-hmm.
Mm-hmm.
Only. And it's interesting to, who knows whether that'll stick. My first year was brutal, and we had the opportunity to talk with some life insurance home office people. You and I did recently, and one was asking, what I want to do in a few years from now, whether I see myself having agents underneath me, and I'm like, probably not. He's like, oh, why? It's like, truth be told, I don't like most agents. I don't like, not who they are as people, but the business. I just not interested in that. And
be honest. Some of them, you don't like them as people. But it's okay. We don't have to like everyone. They don't like us. Not them, but anyone, right. Everyone. We don't. It's all love, kumbaya. There's some people that I don't like. Well, there's just a lot of people that don't like me.
But just like you were saying, you failed all the tests and all the conventional
the LIMRA test. Other than that, I'm a pretty dang good test taker.
Yeah.
I didn't meet
driver's license test.
Let me see.
But the same deal. It's like I feel a lot of friction with the conventional industry.
There is,
and to the point that I struggle with even, of course I only do IBC. We've talked previously on the show. I forget the episode about what a financial professional is, and what the question that they should be asking, and the need or the problem they should be solving for people, mm-hmm. right? Helping people understand the need for capital and then how to systematically accumulate it and deploy it efficiently over their lifetime. To me, that's the question to be solved. That's what IBC is doing. And it's if that's what I'm going to do in a professional capacity, well, then what else am I going to do?
Yeah.
Give you a quote on your car. It's
I don't think too many P&C agents really grasp the idea. Most of the big P&C companies, they have quotas, right? No kidding, right? And so they have, and I don't want to mention any names, but they're household names, property and casualty agencies,
Which, by the way, there's nothing wrong with that. If you sell that product, then fine. It's just
No, there's a need for it. You have an automobile, you're forced to have insurance, but you should have insurance on it anyway.
Right.
Your real estate, your home, your office, whatever it is. But I'm just saying those property and casualty agents have quotas. They have to write a certain amount of life insurance.
Mm-hmm.
It's okay. Maybe they have to write a certain amount of annuities. I don't know that to be true, but I hear what you're saying. So you don't want to, and you don't do anything but practice the infinite banking concept. Right?
And I see that, my point in bringing that up is I see that as an extension of Nelson's legacy. Like, because of what he did 20 years in 2000, writing the book, Becoming Your Own Banker, 20 years later-ish, there's people just doing what he taught.
Yep.
Right? There's only a few of us, but it's happening. It's just got to start somewhere.
Yep.
There are people who are just teaching what he taught and making it that way. And then there's a bunch of people who take what he taught and switch the words around, come up with different cute ways of saying it, and then they get a YouTube channel, and then you have to deal with 1090.
Well, it's like 1090 or IUL, or you've got to do the HELOC, and then you've got a lowest interest rate environment ever. You've got to go borrow a bunch of money to run it through your life insurance policy to buy turnkey real estate, and it's all kinds of stuff. The tons of noise out there, tons of noise. But I respect that, and there's nothing at all wrong with that. I do more than the infinite banking concept, because I had a tremendous amount of clients. Well, there's several reasons, not any one reason, but I had a lot of clients when I met Nelson, and have gained a lot of clients since I met Nelson. And, when you meet someone, a prospective client, you've got to, and I think I made a presentation titled, you have to meet the client where they're at. They've done whatever they thought was best for them up until the time that you've met, and they're still going to do what's best for them. I'm just saying, there's in 30 years, 30 years of practice, I have the majority of my career has been correcting mistakes. And I'm not saying that in an arrogant fashion. Of course, the clients that I meet, they're typically not happy where they're at, or they wouldn't be reaching out, right? So, right, wrong, or indifferent, the older they are, the more financial products they own, and the more strategies they have been exposed to or participated in. So maybe they have life insurance that their brother-in-law purchased or sold them. They purchased from it because everybody and their brothers has had a life insurance license. And the reason is because it's so easy to get. And everybody thinks that the commissions are so high that you're going to get rich and retire or whatever. And then when they have a tough year like you did, or tough 9 years like I did, I think 90% of the agents, first-year agents, don't make it past the third year. The majority of the attrition is in the first year. I mean, it's tough. I know we make it look easy. I know I make it look easy. Thank you for the opportunity. But there's a whole tremendous team here. I can do anything, but I can't do everything, right? And so when the home office people, never mind, I won't go down that route. But I'm just saying that, I do more than the infinite banking concept because of the clients that I meet. They're potentially they have very complicated financial arrangements, and but I must say that all of that other stuff is ancillary. You have to deal with it in some form or fashion, but I agree with you, and I think that, the more people that become aware of the infinite banking concept, the more people that become aware that you can become your own banker, and what that means beyond the little click funnel gimmicks, targeted, if you're listening to this episode, if you're listening to any of our episodes, you're going to be targeted by all these ClickFunnels marketers, right? They use keyword search, banking with live, Nelson Nash, infinite banking concept, James Neathery. Don't think that all of those, videos that are coming up to the right of your screen are accidental. YouTube does have a great algorithm, and people pay a lot of money for the keyword. So I'm just saying that there's a reason all of those things come up, but the more people that understand the infinite banking concept and what becoming your own banker actually means beyond purchasing life insurance, the less and less all of these exotic financial products and solutions will even have an interest.
Yeah.
So.
Yeah. And like in the grand scheme, talking about having other clients and the correcting mistakes of the past, I mean, and when I first started, there was like a feeling of inadequacy, like on just selling life insurance. And
there's people out there that'll help you feel that way.
Yeah.
Yeah.
And then especially when I was at that captive company, the people it was expected that you went on to get securities license. Of course you were going to, go sell stuff related to the stock market. And I've done a total 180 on that now. And Nelson would say that this is ridiculously simple. And really, when the capital thing clicked for me, it's like, oh. And it really solves all the problems. I mean, there's no objection that people have ever raised that Nelson didn't either answer specifically or laid the groundwork so that you could answer it and you could see just how closely connected it was to his line of thought. Like the one I'm thinking of is the inflation question. The dollar devaluation, and I'm really kind of over talking about it because it's the Austrian people have done the public no favors by consistently doomsdaying, consistent, hyperinflation is just around the corner. We're going to be Weimar Germany tomorrow.
Yeah, right.
It's just exhausting to me. And like Nelson would point out, that even in a price inflationary environment where the purchasing power of the currency is falling, is like, well, I keep paying in those depreciating dollars, and it gets me more and more cash value every year.
Wait a minute. The dollars that I'm paying in are depreciating, and the further out I go, the less valuable they are.
And
but
more
with
valuable.
the life insurance, there's an increase in an exponential curve in the opposite direction, up.
Yeah.
The value of the cash value, the value of the death benefit. And everybody in the infinite banking world, not everybody, I don't want to paint with such a broad brush. I have my fanboy critics. The death benefit, you can devalue the death benefit all you would like to.
Mm-hmm.
All you would like to. As my son Jake points out very clearly, by construct, the cash value must equal the face amount at the end of 120 years. All life insurance, whether you have a 10-pay, 30-pay, 20-pay, whatever. That's in fact true. By construct, the cash value must equal the death benefit or the face amount at age 120. And they're both growing over time. So my question would be, do you want a little death benefit at age 120 or do you want a large death benefit at age 120? I rest my case.
Mm-hmm.
Okay. Just like when you mentioned 90-10 earlier, Nelson wrongly, incorrectly, people read Nelson's book, agents included, and say, oh, this is how you do it.
Mm-hmm.
Right? Nelson said many times, you've heard me say many times if you've listened more than once, that Nelson wouldn't have put illustrations in his book if he were to rewrite it or to do it over again. Okay. But if you look at equipment finance, and they're all different throughout the book, CD sisters, the cost of a college education. In equipment finance, 60% of the premium went to a PUA, 40% of the premium went to a base, right? So everybody assumes that 60-40 is right. And so you have, when you mentioned 90-10 earlier, I've heard of the presentations. I do not watch all of that stuff that comes up on your right. I don't watch it. All right. Well, 90-10, 10-90, 90 to the PUA, in term and 10 to the base. 90 is bigger than 60. No kidding.
Mm-hmm.
Right? No kidding. I'm just saying you can oversimplify. It's you look at a policy construct and say, oh, that's the right thing to do. You look at a life insurance illustration and look at how well and wonderful indexed universal life illustrates. Well, that must be it. That must be what you need to do. That's right. Because this number is bigger than that number. So let's put all of our chips in. Let's throw tons of money at that. Mm-hmm. So,
yeah, one thing I wrote down too is I was thinking of when I was driving down here is how the purity and consistency of his message really kept me going in that first year. Mm-hmm. You know, you talked about turnover in the industry, that it's so high, and that yet simultaneously you have agents who want, they want to split a couple of cases with you, and then, they'll have the answer. They'll know what to do and then go repeat it. You wonder why that results in such high turnover. It's, he had and I've thought about mentorship a lot and spoke about it in the 2020 think tank talk. And I'm not sure mentorship is even the right word. I think it has like a casual connotation, a mentor, someone, you have dinner with every now and then and talk about like grand wisdom and all that. I mean, there's a degree to which that's part of it. And like, there was certainly a mentor-mentee relationship between Nelson and I know there was between you and him, but I think, I wonder if a better word is apprenticeship, because it's to me, that sounds more rigorous, more technical, more structured, longer term, more involved, harder. I think of like craftsman guilds or metalworkers guilds in 1600, 1700, where you'd be a apprentice for 7 years before you could
servant. Benjamin Franklin.
Yeah. It's a much more accurate model for what it means to come up in the business.
Then a journeyman,
and
then a master, different trades. What a concept.
Yeah.
What a concept.
It's really, I think it's a better fit, and that's what it's felt like with Nelson and now with you. It's just it's a constant, consistent learning experience that just continues. And
which is the way it should be.
Yeah.
Right. We should always continue learning. But if you don't have the correct the longer you go without a correct foundation, if you're continuing, you spoke to it earlier on the time periods of your learning, building blocks of your learning shortened. Well, that's attributed to you to recognize that this isn't right, or something's better, something's missing. I'm just saying the longer you go on a weak foundation, the more fragile it becomes. Right? So if you have a solid foundation, then you can build whatever you wish on top of that. In the short-term thinking, when you spoke, that Nelson really simplified a lot of things. And as a matter of fact, so simple, the 92 pages is so simple that a lot of people have a tendency to jump over it, and especially the academics, or the highly educated individual, whomever they are. It's easy to jump over the simplicity. I mean, I heard a girl talk one time. She was maybe is still in the financial services industry, and she referenced Nelson's book and then promptly explained how poorly it was written when she might have had a bachelor's, maybe she had a master's in, free love or whatever. And you're going to criticize a 92-page book because you're trying to promote yourself as someone in the financial world, and I'm like, poor girl.
Yeah.
That's too bad. That was a long time ago, and it's come up different times. So I'm not going to read a book. Why do I need to read a book? I get the concept. I got it. Just let me go. All right, you can go. Goodbye. But think long range. In America, we have a hard time doing that. Thinking generationally, very few people do that.
Yeah.
And then don't be afraid to capitalize, i.e. don't be afraid to pay a premium. Right? And if you have to get, quote unquote, everything out that you put in as soon as possible, you're afraid to capitalize.
Right.
And you're not thinking long range.
Yeah, the failure to abide by that rule has really caused so much confusion. I mean, they get the money in, and then the idea of premium equaling income day one. I'm going to put everything I have into a policy to go get a policy loan, and I'm going to use the policy loan funds to finance my lifestyle. And then year 2 is going to come around. I'm going to pay another premium. I'm going to take another loan to pay for. But then I got this big old loan balance outstanding, and here comes another one, and now I just have more and more of a loan balance piling up. And I don't really get. Yeah, that's the journey into the wilderness, right? Going off into the noise, and it comes from a refusal to embrace capitalizing, a refusal to embrace that early illiquidity. And it fits hand in glove with think long range. I was having a conversation with a current client yesterday, talking about his next policy and potentially not using term or using less term and sending more of the total premium to the base.
What?
And I was telling him about the policies I own and the percentage that goes to the base, which is more than most people who just start off will do when they get their first policy. But I was telling him why I do that. That the willingness to take on that additional illiquidity will mean a higher cash values and death benefits way down the line. Like it's going to be a while, it's going to be decades, but when I get there, I can look back and say, well, I put up with, I endured the cost of the illiquidity. I embraced capitalizing early on, and the benefit is now higher values where I will be at that time.
Look, the further out you go on, look at all life insurance illustrations or investment performers or whatever, the better the numbers look. But when you say that, it does not mean you have no access or no liquidity.
Right.
Right. That you do not have any access to capital until you get way out there. So let's be clear.
Yeah.
You're enduring a loss of liquidity or a lack of liquidity for a time period, but you're enduring less liquidity for a time period. Right?
Yeah,
you still have access.
Not that there's none.
Exactly.
Not that there's zero. I can get a policy loan day one, no question. But of the total annual premium from going to the life insurance company, in my contracts, a relatively higher percentage is going to the base.
Right.
Which means that compared to a policy where there's less going to the base and more going to the PUA, there's going to be more liquidity there. There's going to be higher cash value early on. But the long-term effect will be great. And so but you don't see that, right? There's not a tsunami of commenters talking about how, well, we should be paying a higher base. 50-50 is the only way to go. It's 1090 is the only way to go. So it's just.
Or now it's 80-20 now, and I'm not, you cannot leave out universal life. Don't leave that out. But I see it every day. And then until they're in their 50s or 60s and they're like, oh my gosh, James, I've been listening to you for months and everything that you have said, I'm watching happen in my policies. Whether they're 1090 and you're in the third year, whether you have a HELOC that you funded the first year's premium and then collateralized, oh my gosh, 100% of your loan value. Now you're in the second, third year, and it's like, how am I going to come up with the premium, James? I'm like, why are you calling me? Mm-hmm. Well, because this is the other guy or the other person is like, oh my gosh. So just don't leave those other scenarios out because 1090 is very prevalent, and you're being stalked. If you're watching this, I'm telling you, you're being stalked. So expect to have 1090, universal life, HELOCs blow up your device, whatever you're watching on.
But what I'm saying is that all of that is a consequence of not abiding by these very simple rules.
And it's a continuation. Listen, if we go back, think long range. Right? Don't be afraid to capitalize. Be an honest banker. Repay your loans. Don't do business with banks, i.e., other than, checking and savings. Don't be dependent upon third-party lenders. And then he added in the last several years of his life, rethink your thinking. And this is the 1090, the universal life, the HELOC, all of that is a continuation of flawed thinking, period. That's what I spoke about at the Nelson Nash Institute in 2020, right? It's all the noise that is out there, and you can't get rid of the noise fast enough, and we're all in it, right? So you mentioned a client. I had a conversation with the client. I have a phone in my ear on the way to work, on the way home. Beautiful people. I love them all. I wish I could meet you all face to face, and maybe we'll have the opportunity. This gentleman, been a client about a year, pays substantial premium, has policies on himself, his children, Jim. I hope you're going to be a guest sometime in the future. So this element of faith and unknowing, right? And when we met, he had coverage that wasn't correct. So we corrected it, okay? He still is listening to all this stuff, listening to the 1090. He had it, IUL. And so he gets a first-year dividend, right? And, of course, he was concerned and that it might not be what was illustrated, right? And so he's like, oh, my gosh, James, he specifically mentioned 1090. He said the dividend that was paid on the base compared to the PUA and the PUA and the PUA, he said, I think I want my third policy to be all base. Right? And most all of my clients, and I'm sure yours as well, are paying substantial premium no matter what it is relative to their situation, right? And so when you push through the noise, right, when you choose to vet the noise against, what's said, what Nelson said, what he's written, it is worth it. The search for the truth, you will be rewarded, in my opinion, if you avoid the noise. Now, if you succumb for whatever reason, we're all human. I'm not saying at the end of the day, it's devastating and you can't overcome it. But in the future, whenever you've used up all of your insurability and you can't expand because of the amount of death benefit that some of those Frankenstein structures require, and I'm specifically mentioning or referencing a presentation that I did at the Nelson Nash Institute several years ago. This is nothing new, these constructs. I spoke about them. I don't know what year.
2014, maybe?
Yeah, I don't know.
13?
A room full of agents. A room full of agents. And I don't know that they heard, some, not all. I'm not saying all of them. None of them heard me. The majority of them did not understand what I was saying. And I get it. I don't wrap up my points at some time.
This is 2018. I know the one you're talking about.
Okay.
They didn't. It was like, is that kind of awkward silence? It's like, he's saying something important, but we don't know what it is. When Nelson, you talk, and I had the opportunity to speak with Nelson a couple of times, do joint presentations with him. Whenever he says good boy or good job, attaboy, it's like, I don't really care if you understood what I said or not. He got it if he agreed, So I'm just saying it's not new. And then, it's not like the whole life insurance industry you spoke of, it's repulsive almost, The idea that you've got to build me an illustration, and I've got to talk to 3 other people, and I've got to compare illustrations, and I'm going to make a decision based on some numbers on a page. What a tragedy, right? Probably don't understand.
Oh my gosh. But I don't trust you.
Right.
I don't trust the other guy either, but the numbers are bigger. 90 is bigger than 60. 1.1% is bigger than 1.05%.
Yeah.
No kidding.
And it's in the industry too, talking about the home office people we spoke with yesterday, and
whom I love. Thank you for
yeah.
But they don't listen. They don't listen. They surely don't listen an hour in. Do they even own life insurance? I'm kidding. I know. In fact,
one of them does, but. But
okay, man, get to it.
But the idea that a policy loan predicts a lapse. We mentioned earlier that the loan provision was there so people could finance the premium. Mm-hmm. Right? You don't have to pay out of pocket. You could just borrow.
Well, that's historically true.
Yeah.
I mean,
but people still, and that's historically true, sure. But, at the same time, the numbers are there. You can look at someone who pays a high premium. They have all the numbers. They've got the finance. You got to tell them what the income is. They know that. They know what the premium payment history is. Right. So they can theoretically put together that this is a high percentage of income going to premium. Right. And then you can see the structure. Right. They know of that total premium, a certain amount's going to base, certain amount's going to PUA. They can see the loan activity on those policies.
Oh my goodness.
They can see that the policies are paid. They can see that those same people, instead of lapsing the policies they do them, go and get more policies. Well, so it's like the data's there.
Okay, but let's think that through. Let's keep going. Okay, so historically, outstanding loans have been a precursor to a lapse, right? The policy being cannibalized or surrendered, it's not going to remain in force. It's going to lapse, right? So 150-year history, okay? An outstanding loan is a precursor to a lapse, statistically. But everybody knows that if you have a loan provision that, and like your uncle that sold life insurance, or your grandfather who was like the greatest salesman in the world, and you and your father, the next two generations, squandered everything he did. I'm specifically speaking of someone in California, right? Because you have a loan provision, everybody knows that has owned life insurance with a loan provision, with cash value or account value, that you borrow against it from time to time. That's nothing new, all right? So historically, long-term, high balance outstanding loans predict a lapse, right? So companies don't necessarily like that. But then consider this, that the lapse ratio is part of their pricing, all right? And you don't have to be an expert in life insurance, and I sure don't want to be an actuarial expert, right? So if a company controls their future obligations, death benefit and cash values, and they adjust to within their abilities to, right, adjust a lapse ratio, or if they miscalculate a lapse ratio, it will affect their long-term profitability.
Sure.
Okay. So my point here is that the infinite banking concept, with the companies that embrace it, right, the strong, financially, fiscally strong companies that embrace the infinite banking concept, that is one of the strongest blocks of business that they have. If a loan rate is 5% typically variable, or 8% on a fixed rate, where's that life insurance company going to go and enjoy that kind of return in today's environment? Lowest interest rate in the world ever in history. So you got to wonder. Now, I know that my opinion, what I've come to believe, that some of these life insurance companies hate the infinite banking concept because they didn't create it, right? And some don't like it because, all of the shenanigans that go on by the sales force who doesn't understand the infinite banking concept, or capital, right? Or even life insurance.
But to your point, stop giving them contracts.
Oh, my goodness. I have blistered every home office, CEO, president, vice president, regional, blah, 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 blah. It's like, I never miss the opportunity to share my opinion. Yeah. And in love.
Like, you can't complain about what the agent force is doing
if you continually give them a contract.
Yeah.
Right. And when I tell them, like, stop giving them contracts, you are guilty for giving them a contract. They're like, it's like, you need the premium so much? I mean, you need the premium that bad, or whatever. And I enjoy sharing my wealth of knowledge with home office life insurance agent. But my point is that some of the life insurance companies don't like the idea of you becoming your own banker because they don't want to process a loan. They think that they know better than you what to do with your capital, with your money. They're afraid that it's going to lapse. Maybe they think that they can get a higher rate of return on the policy loan. Maybe it causes their lapse ratio to go down, and they calculated a higher lapse ratio for their profitability. Yeah, don't think that doesn't happen. And you, actuary, listening, you know what I'm talking about. You, home office individual, you know what I'm talking about. You can't disagree with me.
Yeah. My thing is they shouldn't get upset about that when they have the data. Like, this isn't a mystery anymore.
It's not a mystery, but if you properly price a product,
then it's fine.
Right, exactly.
Yeah.
Well,
regardless of whether they're relatively higher or lower lapsing, as long as you can predict.
And if you have 100 CEOs that make $20 million a year, you got to be pretty dang profitable. Or how about this last? I'm going to spreading some love on the life insurance companies, right? Just yesterday or the day before.
Oh yeah.
a stalwart 110-year-old life insurance company, mutual company out of the Midwest, demutualizes. Right? Wonder why? Well, they've been. They've made bad decisions over the last several years. They've been in business 110 years-ish, somewhere around there, right? Demutualized, and I'm like, who's going to purchase them? That's the only reason why a company's going to demutualize. Oh, a private equity, Canadian private equity is going to buy a mutual life insurance company? Wonder why? All those cash values, all those reserves. It's like,
Yep.
Maybe they mispriced some products.
And when I Googled it, there wasn't a lot about it, and so it's kind of, at least it seemed to me, kind of under the radar.
Yeah, man, if you're one of those agents that's been promoting that company, it's like, I bet your phone's blowing up. Don't, it's all going to be okay. It's like Nelson wrote an awful lot of business with Equitable Assurance. They demutualize because of Harvard MBAs, right? These people that want to drive up the stock prices, pump and dump kind of scheme in the long term, drive them up, sell them, fill them up with all, go public, right? Create shares of stock, sell the stock to all the pensions across North America, right? And then, of course, it's first private, get the value up. Sell it, and then go public.
They leave, yeah.
And then short it, drive it to zero, right? Do it all again. Yeah. It's like the same scheme. I can't wait to have a conversation, maybe, if I can encourage Barry Dock to come on and talk about it.
Yeah.
I'm just saying, these life insurance companies are not squeaky clean. But at the end of the day, they demutualize, so the policy owners are going to get some shares. But where I was going with that, they're like a $40 billion company, and I peruse a press release. I roll my eyes when I hear it and see it, and it's like, another one, rest in peace, God rest that beautiful structure, mutual structure, God rest their soul. All right. $40 billion company, and they're going to allow $500 million for the interested parties, i.e. the policyholders and all the other top-end people that are going to probably become overnight millionaires. And the policyholders, $500 million on a $40 billion company? Yeah. It's like, shame on you. So, look, we were supposed to be talking about Nelson.
It's all related.
It's all very related. All right. I got to mention, I did make some bullet points, and I got to mention, and this is due to an elderly gentleman, but an early adopter of the infinite banking concept. We were at it was either a Night of Clarity event hosted by Carlos Lara and Bob Murphy and Nelson, and they had a bunch of Austrians there. Went to a couple of those. It was either there or an NNI, or this prior to NNI, or just a think tank that Nelson. It's probably a think tank. And this guy comes around and says, James, we're putting together a trip for Nelson and Mary. We're going to go to Austria. It's his favorite place in the world, Austria, Vienna, Austria. And I'm going to get a couple of agents together, and we're going to finance that and go and enjoy. And I'd never been out of the country. I mean, I've been to Mexico and maybe on a cruise, but I've never been to Europe, right? And I'm like, my gosh, what would that cost? Here, I don't know how long I've been practicing infinite banking concept, and the guy says, well, does it matter? Finance it. You got cash value, don't you own policies? I'm like, well, yeah, of course. So I'm like, oh my gosh, it was a revelation for me. A guy comes up and says, hey, let's go do this, and you're like, how are we going to pay for it? And we're like, oh, yeah, of course. So I had the opportunity, and I'm just being thankful of some of the things this is one of the things that broadened my horizon, right? Traveling all over Vienna, Austria, and Salzburg with Nelson and Mary and a couple of other people, my lovely wife, Jen, and myself. It's like, you mentioned the word apprentice earlier. I'm like, I tried to be Nelson's water boy, for 16 years. So I just don't want to fail to mention the opportunity that I enjoyed with my family, Nelson and Mary, going to one of his favorite places in the whole wide world. I want to thank you, Ray, for expanding my horizons. So, all right, I think I mentioned everything that I noted.
Yep, we miss you, Nelson.
Yep.
Thank you. And
all right, well, thanks for listening. I hope you enjoyed it.
Yeah,
I had fun.
See you next time.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.